Hi. Hi.
Hi. So you guys are in as Kata. Oh, so Kata, I can see you and because you're in as a
Yeah.
admin, I
Yeah,
think.
but you invited me as well, so I got an email about it.
Okay. And then Anna can. So the participant, which is Anna, she can't. Yeah, she won't be able to turn on a video or can't hear, but she can hear us, from what I can tell. She's messaging me here. Correct. Okay, great. So I'm hoping Remi joins shortly. Not replying to my messages. It's making me anxious now. Carter, you'll have to give the presentation if Remi doesn't come on, you know that.
Okay.
I hope you're prepared.
Yeah, just let's see what is it about.
Morning. I was just speaking to Remi, so he'll join very shortly. See, you don't want to be early to your own birthday party, so he'll be here in a minute. In the meantime, just bear with us for a minute or two, and there's a Q&A possibility. So I've got a couple of prepared questions. if there's anything in particular that you want me to ask, here he is now. Put it into the Q&A, or you can send me a message on WhatsApp. So hopefully Remi joins. Remi, you're there?
I'm there, yeah.
Excellent, excellent. So yeah, we've got a nice group of people in the audience. So hopefully they'll have some good questions for you. Yeah, I think we're a minute over. So if you're okay to start, we'll get going.
Yeah, no, let's get going. Sorry, I can't argue there is a time difference between Cape Town and EU. So yeah, thanks for inviting me, and good morning to everybody.
Yeah, and well done for looking a lot more professional than I look. So, but in my defense, I've been up since 4 o'clock in the morning. So, super, super. So we're really happy to have you on. I really enjoyed the article you did with recently with the commodity conversations. Mr. Kingsman, what's his first name?
Jonathan.
Jonathan. That's it. Yeah. No, I always really enjoy when he does his interviews. So yeah, it was very enlightening for me. I guess the first question, just to get started, is just tell us a little bit about yourself and just give the audience a sense of your background and how you came to this topic.
Yeah, sure. Thanks. Yeah, my background is commodity trading, but let's start. I was born in Africa, in Senegal. I spent part of my youth in East Africa, and I'm French. And after graduated from business school, I started my career in London in the financial market. Very quickly, I was attracted by the commodity trading universe, so I joined Dreyfus. I joined your colleague Noel Freyer at the time. We were both young, and then in the late 80s. And basically, yeah, stayed a few years with Dreyfus, left them, rejoined them in Spain and Portugal in the 90s, and then late 90s was transferred to Johannesburg, to Africa, to take over the Louis Dreyfus office, which, with the market post-apartheid, reopening. Stayed there for 10 years, went back to Europe for family reasons, did some interesting initiative of food security with Morgan Stanley and other partners. But then Africa called me back, and very quickly I was back in Johannesburg for Ameropa, the fertilizer and grain trading company, and then with my ex-colleague from Dreyfus with BTG Pactual, for Engelhardt trading. But I decided that somehow I was I had use all the experience and the learning I could get from trading, and I was looking for something new. So I got interested by and to look at trade finance. I had this interesting experience, which I relate in my interview with Jonathan. But being one day in Tanzania and dealing with a big wheat buyer and the guys, and I said, are you buying wheat? And he said, no. Join the queue, and this was at the conference. There's Cargill, Dreyfus, Cargill, all the ABCD were there. And I said to him, but I can provide finance. And he said, okay, come and see me in my office tomorrow. And I had a closer look at the trade finance environment in Africa and realized there was a very interesting scene with a lot of potential mid-market or even big traders, looking for finance and very little supply. So I pivoted to Barrack's fund, trade finance management. This was the biggest fund in Africa, managed one of the fund for a few years. And and basically I've remained at the crossroad of trade finance, commodity trading, fund management, but as well, with a renewed interest for decentralized finance and the digital environment that we're going to talk about.
Okay, very good, very good. Yeah, I suppose just it's hard for me to get. I've always struggled I suppose, to get interested in Bitcoin and blockchain. It's just something that's never really grabbed my personal interest, which is probably a shortcoming on my part. So I haven't really given it the attention it deserves, and I'm pretty ignorant about it, I'll be honest. So I suppose in a very basic sense, like how does this all, I have a vague understanding of Bitcoin. How is this similar to Bitcoin, different to Bitcoin, or is it anyway related to that world?
So it is. You have the same mechanism underlying, which is basically the blockchain, which was first, developed to, via Bitcoin, and stablecoin basically they use the same DNA. It's the same environment. We find the same underlying technical elements. Share ledger. I mentioned blockchain, and basically these are coins. Okay, the main difference between bitcoins and stable coin is bitcoins are basically they've been long in the market, but they don't have as per se an underlying collateral. They are basically mined and created on a very tight supply demand scenario, which in my view is highly speculative. I'm still remain a very strong fundamental believer in terms of the market technical movement, and I struggle a bit with Bitcoin, despite the fact that I'm very and I've always been very interested by the underlying construction of Bitcoin. Stablecoin, as you'll understand, is a Bitcoin pegged to a stable underlying. I mean, we have USDT, you have USDC, you have a few different stablecoin. You have stablecoins which are pegged to the gold, and basically this is for me essentials, so that you have a gem value and you know what you're trading. It's like an NFT. You remember a few months or couple of years ago, this was a crazy word for this non-fungible token. This token which were
gorillas, right? They were
there was the gorillas. There was the Trump token. There was a lot of them, yeah, and this had an incredible rise and incredible fall within a few months. So obviously this is a bad example because it didn't work, but the essence is the same. It's to peg basically essentially a digital instrument to a real world basically reference, and make sure that this relationship is respected and will follow. So basically by doing that, you create basically a crypto money or a proxy money in a digital form, which have a non-value and a non-counter value vis-a-vis other currencies. And the strengths of stablecoin is all the operational environment around it, which allows to settle instantly, do instant transfer, transact 24/7, have a total transparency where your money is, cost efficiency, etc. So it's really all the benefits that you can achieve with bitcoins without a peg value. Bitcoins is more speculative than stablecoin. Stablecoin is going to be basically the chain and the rail of payment, which will be optimized.
Okay. So like for me, so if this is like payments, finance related kind of way you're applying this, like I suppose my first question is, what was wrong with the old system? We seem to survive hundreds of years with the regular banking systems, fiat currencies, etc. Like what's the problem that this solves?
Well, the problem itself is that the old system doesn't work. When I moved from trading into trade finance, I was really exciting because I thought that here is a huge arbitrage opportunity as far as Africa is concerned, probably over $200 billion of mismatch between what the continent requires, in terms of short-term credit and what the market is able to provide. And that's a dream environment for any traders that listen to us. So, so I thought really that the traditional players there, the commercial banks, the DFIs, were basically part of the problem, and they've been for years and many years part of the solution as well. Let's be honest. So my incentive was to move into credit and private credit, and trade finance. Every year I participate to this conference called GTR, which is the mecca of trade finance. You have this conference taking, being as well they take place in London, in Geneva, in the rest of the world. Every year you have the same question, how do we bridge the trade finance gap? And every year there is no solution, so today you have this environment where even private credit, and what's interesting is that this is seen as a solution for this deficit, doesn't provide basically the information and the solution for the markets. I'll give you an example. I've got a client of mine who is actually looking for to export some natural rubber, EVEA, from one of the West African countries. It's a small deal. It's $5 to $10 million, and they've been looking at pure, simple inventory financing. Okay, so we approached two potential funds, or finance suppliers. One is a bank, one is a private credit fund. The credit fund I work with, was great, provided solution, but at the end of the day, the pricing was quite high. Net for the clients, this would reflect 15 to 20% interest rate, and the condition where still attached. I mean, trade finance should normally look at the business itself, and the underlying commodity being used as the collateral. What's happening in reality is that this never happens. There's always a recourse, and even a private credit fund will actually look at the balance sheet of the client, will do a full DD. So what should be a process of a few weeks or a few months' time takes actually 6 to 9 months. Okay, so I approached the bank and I say, okay, I had a interesting meeting with the whole investment bank team. I have to be honest with you, these guys had no idea, and this is one of the major banks in Africa, how to deal with inventory finance. They don't know how to actually concentrate on the underlying commodity, use it as a collateral, as a security, and basically finance around it. So this is the state of the market today. You have basically this, especially these smaller size, medium-sized traders who are basically maybe not the balance sheet strong enough to attract the attention of the bank. They don't have the size of the deal. I mean, today, if you basically present one of the bank anything below $10 million, you're going to struggle because it's not interesting. I mean, to their defense, it takes nearly the same time to actually do a $50 million deal than the 10 million. But still, you struggle. So this part of the economy in Africa is struggling today to get finance, and there is no solution. There is another factor as well. If you are today basically being charged 15 to 20%, if on top of it you had value date on your transaction, if you need to open an LC, it's going to be between 2 and 4%. Foreign exchange friction, everything will add basically to the fact that it is a static quote. Today, and for decades, you've had basically a situation, and I'm talking from Africa standpoint, because, and I hope we can transfer that in another environment where there is a radical mismatch in your S&D of credit, which is basically underlying of the 80% of business export in Africa, commodity trading export, and that is blocking the system, and that doesn't work. So either we leave it like that, and that's what's happening every year, or we find alternative tool to it, and these tools exist. These tools today are going through the roof. They are first the mean of payments, and then the credit attached to it, and then the whole digitalization environment. Today you have $300 billion of stablecoin being issued. To date, there's been a major revolution, or change of mind in the market, since July 2025, when the Trump administration voted the Genius Act, which basically formally today recognize stablecoins as a digital asset and gives certain, regulation attached to it in terms of, being backed by treasury bond, etc. So today you have the two main basically stablecoin suppliers, Tether and Circle, USDT and USDC, are basically going full speed in this environment. I've got a few numbers here I wanted to share with you. Today, I was talking to one of the stablecoin provider a few days ago, and their book, and that's one of them, it's the biggest. Their book today in transaction per day is $50 billion. Okay, if you put Mastercard and Visa together, I think Mastercard is around 18, and Visa is around 36 billion. So they nearly the same. And stablecoin is only a few years old. If you look at Standard Chartered in emerging markets that we're talking about here, reckon that today there's $170 billion of stablecoin in circulation, on a rotational basis. They see 1.2 trillion at the end of 2028. Citibank believes that by the end of 2030, there will be $4 billion of stablecoin in circulation in the world. So it's a process which is happening. You've heard as well of the central banks. The banks are actually actively looking at it. Today, 68% of the world central bank are looking at stablecoin as a proxy for their fiat currencies, and they're actively looking at it. So even from their side, they recognize the technical part aspect of it. Obviously they want to control, and they want to, they have another agenda than the trading or the free circulation. But so for me, yeah, this is why I call a revolution. It's happening. It will have different impact in different part of the world, but definitely it's taking place.
And so then, if I understand correctly, it seems that it's the smaller trade financing deals, the 10, 20 million dollar bracket, let's say, that this seems to apply to at the moment. So, is that where it'll stay, or do you think eventually it'll filter its way up to the bigger deals, and the bigger deals will always stay traditional financing structures?
You have an interesting thing happening at the moment. You have people like Tether. They are the biggest stablecoin issuer in the world. They publicly announced that they've set up a $1.5 billion trade finance fund a few months back, which I know has been since then increased quite dramatically. So this trade finance fund is already operating. It's actually operating probably, discreetly, but it's financing, as we speak, some vessels of oil leaving, African country going to Asia. So we're talking of big traders here. Why? Because if you want to capture and use and promote, your own currency and capture some yield, which are better than the 4 or 5% that you would capture on the Treasury, U.S. Treasury bonds, you need big tickets. So from a pure short-term utilization of stablecoin, I see already some bigger deals being utilized, and to use the stablecoins. That being said, as we all know, today, due to the constriction of the industry, and as well the risk appetite and the configuration of the bigger banks, the credit for the trade, tends to be more liquid, with the bigger guys. So you could argue that today these bigger guys are not the one who need credit, and for them to be able to access, alternative credit, even if it's a few pips cheaper, is not really essential. So from a pure demand perspective, I see definitely from the buyers and the borrowers and the need for funding, it will come from the mid market, because this is where this mid market is deserted, it's underserved by the traditional and the new financiers, and this is where the requirement and the need resides. So we will see these two different speed. Some big tickets to get things going, but then this crypto money as well. And let's be clear, this liquidity is not coming from the financial market, it's coming from the crypto market, okay? These are basically Tether and Circles, basically accumulated reserve. Tether is going to make $15 billion bottom line this year, What do they do with their money? They have to put it somewhere. Circle the same, So, and you have as well all the crypto long holders and the coins which exist, which after a while, if you're a trader of Bitcoin, you have a headache, to manage your asset base. You want to de-risk a bit and go back into brick and mortar real assets. So I see a few funds at the moment being established where they are looking at using basically this crypto liquidity and invest in trade finance.
Okay, so like in my head then, we're in this environment where there seems to be, in our industry, a lot of consolidation. So the big fish are eating the medium-sized fish, and for lots of different reasons. And does this open the door for, at the bottom end, for new entrants to come into grain, oilseed trading, to reverse that trend a little bit? So you end up with, we might end up with two layers, a small layer of few massive companies getting traditional finance, eating up the traditional finance at competitive rates, and then a whole bunch of little fish that rely on this credit environment to do lots of little trades, bit more expensive than the big fish, but cheaper than they can do it today. Is that maybe how this plays out in terms of participants in agricultural commodities?
I think so. I see that happening already in Africa as we speak. We see these medium-sized trader. They don't have solution. They either they have to buy in and get hit by a 15 to 20% USD based yearly interest rate, or they need to find and then hoping that they're going to turn around their business and their transaction 5-6 times during the year, so that even it's the 20% on the transaction per transaction basis, they can survive with a 10% gross margin. That works, but if you don't have that, and let's be honest, we know very well that margin in commodity are not something which increase. They strictly decrease, over the time. Then it's a race against time, you need to make sure that you optimize your supply chain, and one of the biggest factors today is definitely finance. So yes, I think this will happen. It is happening. I see already a few of my clients looking and using crypto on a very, a pragmatic kind of opportunistic point of view. But definitely will happen, and we're going to see a rebalancing a bit. It doesn't mean that the big guys, will get smaller. No, they occupy the place and they continue to operate. But we're going to see this second-tier market getting back, a bit of speed and ability to operate in a credit and liquidity environment at the moment, which is very constrained.
Again, thinking out loud, so one of the things that seems to be evident, even in developed markets like Eastern Europe, Central Europe, to a lesser degree Western Europe, is just because of market stress. There's a rising default rate, I would say, in terms of paying back banks, paying and just in trading environment. So with this, is there mechanisms within this to de-risk the potential for default with small to medium-sized companies. Because it's the small to medium-sized companies that I suppose they feel the stress the most, the quickest. They fold or default, and then that filters up to the medium-sized companies and maybe even up to the big-sized companies. So does this, in net terms, a migration to this de-risk the system?
I think it will. It brings additional benefits to the actual transaction flows. Today, if you transact, there's still risk as well. There's quite a few risks, as every trader knows. But the two main in terms of payment process is your market risk. The ability of your customer to contractually basically perform, and then the payment risk. Today, stablecoins can mitigate this risk. Why? Because you have transparency. For example, you can have visibility into the wallet of your counterpart and knows that, for example, the funds are being positioned. You have as well security in terms of this group, the ledger, which will give you as well the same kind of transparency. You have the ability to perform basically proxy LCs. One of the key elements of stablecoin is what we call smart contract. You can actually program or pre-program a transaction. So if certain things happen, automatically the transaction will actually perform certain tasks, okay, and via the stablecoin. For example, I buy X amount of grain from whatever a silo somewhere in South Africa, and I agree with my seller that if he sees that I've deposited 80% of the amount in a wallet, in a stablecoin wallet, and against that, if he delivers a silo certificate and quality certificate, automatically the transaction can take place. So that basically creates nearly documentary credit or digital escrow, basically a condition which will bring some liquidity. I mean, there are as well, we've seen over the years some bad experience on crypto. There's been over the years a few big scandals which were more linked to crypto exchange, what we call decentralized exchange, and sometimes some some attempt to steal some crypto. But for me, this is the same league as some of the scandal we've seen in commodity trading. I mean, that should be the exception. It's less than 1%, and this shouldn't be part of what we discussed today. So I think today, there is definitely close security and in terms of duplication of payment, in terms of forging the documents. I mean, we one of the main development on crypto has been the digitalization of documents, EBLs and all that. That has bring a lot of benefits. The problem is that this is document centric. It doesn't create basically more fluidity or speed in terms of payment. So. And that's why as well we are where we are today. I've shared over the past few days a few communication with some traders, with some initiative which have been done over the past, in this space. We've seen trade finance, attempt to actually digitalize the whole environment, and that has created very often a situation where you add complexity instead of making things easier. In my mind, it's a mistake to try to design a digital environment where we're going to resolve our whole value chain and the way we transact. Same applies for documents. EBLs has been in the pipeline. There's a few initiatives and it's working, but it's a very small portion of the trade today. If every single country in the world has different format for certificate of origin, certificate of quality, etc., etc. How can you digitalize that today? It's very complex. So my bias on that is that the market needs to advance step by step. Stablecoin is a relevant way of processing and effecting payment in our environment, let's look at it. Tokenization, we're going to talk about that as well. It's something else. It has a role to play. Can you put everything? E-documents have a role to play, you know, securitization of assets and real world assets and investment like they're doing in the US at the moment has a role to play. Can you put everything together? No. And I think that's been the mistake of the past. Some of the mistake as well, if I may say so, has been that there's been definitely a reluctance, you know, from the industry to look at change, you know, and what drove me in this digital environment was the fact that I realized, you know, years after years that I'm trading grain and I'm financing grain in Africa the same way my father and my grandfather were doing, you know, decades ago. Nothing has changed, and that cannot carry on, you know. So we have today a certain resistance from the established, you know, as well as stakeholders, because you know the banks, you know, they are biting and they are looking at this change with interest, but at the same time with fear, because this could actually take away, you know, a lot of business from their day-to-day running of operation. Some of the traders as well. You know, why would one make life easier for small trader to operate when I see that in certain industries, like, you know, for example, in mining or minerals, you know, there is a prevalence of big traders who actually, because of what we were discussing before, they have these ample lines of credit, which allow them basically to supply credit to smaller traders, okay, at inflated rates. And that basically, if they see, you know, the smaller trader having an alternative, is not good. So there is a reason why we have a status quo in our industry for a reason, you know, and despite the attempt, and maybe, you know, because of technical faults of the past few years, nothing has really changed up to today, but I firmly believe it's in the process of changing.
Okay. I have one or two more questions, so just to put it out to the audience that there is a Q&A. I got one question in there from David that I think got answered, but if there's any more questions, you know, in the interest of time, we'll wrap it up in the next couple of minutes, but put your questions in now rather than, you know, leaving it to the end. So yeah, you mentioned the banks there and a certain reluctance, like what do the banks make of all of this? Do they see it as a threat, opportunity?
I think they see it as both. You know, as I mentioned, I attend with this interest every year these trade finance conferences that where banks are always invited. There's always a session on the digitalization where everybody said, no, we're going to make it, we're going to move forward, but very little happened. So I think the banks will have to be, you know, are obliged to tackle that. They are looking at it, you know. We know there's been a number of initiatives, but they want basically to control it one way or another. So these and they're fearing, obviously, they're afraid of the progress. So I would say it's a kind of love-hate relationship that we see. The first one to embark fully will definitely score ahead of the competition. But once again, it's a long process. These are big, you know, a company with a lot of admin. If you tell them that from one day to another we're going to make things easier and reduce cost and make less money and get rid of 20% of the staff where they used to check documents, you know, it's not going to fly very well, you know. So I think the change is not going to come within the industry; it's going to come from outside.
Okay, and there's one relatively specific example you have where there was something rolled out in India, and that's something you've tried to migrate into South Africa. What's the backstory to that? It was mentioned in the article.
Yeah, I came across, you know, there's been a lot of talk to something a bit aside from stablecoin or to tokenization. We were talking recently, and tokenization is the same thing as stablecoin. You know, it's a digital twin of a real world asset. Okay, There's a lot of talk at the moment for, tokenization of everything. We talked about the heart, the gorilla. It can be real estate, it can be financial instrument. And I always been very interesting to look at, to look at it from a commodity point of view. I mean, obviously, we've moved very close to tokenization. We have today, I mean, I worked for years at South African Futures Exchange, as advisory, and it's a futures market which operate very well initially with paper warehouse certificate, which immigrated to e-ethers. And obviously a few exchanges. I know the LME is looking at the tokenization as well of their receipt. So there is this interest, and I was looking at where do we see today commodity tokenization in the world. There's been a few initiatives. One was in the in Argentina, a company called AgroToken. They tried to basically issue tokens based on soya, wheat and corn, from stored in certain warehouses in the country, and basically use that as a mechanism to refinance, to transact, etc. It had a good start. I mean, I believe they were backed by Banco Santander. It didn't work so well at the end because there was added complexity. They wanted to use the token for the farmer as well to buy his coffee in the morning, which was impossible. So as well, there was as well the risk. I've highlighted this risk, which is very big, in this real world asset being tokenized, is the link between the physical and the digital. If you don't have a very strong control there, a repository of choice, to control that, then you might be trading a token which hasn't got basically a physical, underlying, so that's very, very. So what I was interested is to see what was happening in India. I flew to India. I saw this guy having at the time done $700 million of commodity tokenization in a very specific environment. It was one of the rich province in Mumbai area where they grow a lot of agri products, pulses, lentils, wheat as well, grain. And he had basically deployed over a number of warehouses managed by the government. I'll come back to that, very important, a network of system of tokenization. Typically, the farmer will arrive, would basically deliver his 25 kilos, 250 kilos, whatever, And that's the great thing about tokenization. You can fractionalize, your minimum lots. And basically would get a QR code. And the QR code basically could actually either as a certificate of ownership, IOU, or could be as well a way for him to refinance that. Or he had basically 4 or 5 banks which automatically look at the QR code at the token and offer right away 60% of the deemed value as an advance payment, And as pre-advanced, you can use that and use it for the next crop, and created basically an environment with 75,000 farmers. It's working very well, and basically allows to create a secondary market on tokens. And the great strength of that is that being token, you can trade it 24/7. You can, as I said, reread it, refinance it, and it can be as well packaged into securities. So on the other side of the spectrum there, this company has started issued, securities backed by this token, which as well can be cut in small portions. So, and that's why, that got me very excited, because one of the biggest problems we have in Africa is this, small scale farmer financing, which has a headache for everybody. How do you find a small scale farmer, and that suddenly gave a whole new dimension of post-harvest, delivery financing, not only from the farmer side, supply side, i.e., nearly impact finance, but as well from the investment side, because as you know very well, the big investment fund, in trade finance, if you are an LP, you minimum you have to invest $100,000. If you can fractionalize as well, the other hand, you can actually issue a security of $100, $1,000, which are linked to the same basically underlying engine. And suddenly you create a brand new environment where you have fractionalized investment funding and fractionalized deliveries for small scale farmer. So the thing was, wow. So we went together to Kenya. We presented that to the Bill and Melinda Gates Foundation. We got a grant, and as we speak, it's still being developed there. Kenya is Kenya. There's a lot of market. Basically, it's not always easy to operate within. And there's already some other operation in place. But this is an example where of great success. And as you said, it's a solution which responded to a need. And right away. And so can we do that in every single environment? I don't think so. Tokenization is really something quite unique. You need to have, in this case, a stable and a very first-class secured, warehousing and control environment. And you need as well, in terms of finance, you need to have an off-take price. In this case, India provides farmers a minimum price environment where the private banks can actually rely on that to actually discount and give the farmer short-term loans, that. So the whole thing has to be, respected. But it's a very interesting environment.
Okay. Excellent. Okay. Well, you've answered most of my questions, and I think you've answered most people's questions. If anybody here wants to reach out to you directly, what's the best way for them to contact you if they have any questions after this? Because, yeah.
I can, yeah. I mean, you see my profile on LinkedIn. I'm happy, then to provide my email, or I'll provide you my email as well, Remi, so people can drop me a line, or my WhatsApp. I'm pretty happy to share my very, special experience. Once again, it's very emerging market, but I'm sure you can give idea or apply in other part of the world.
Okay. Yeah. So if anybody wants to contact Remi directly and you don't have his details, just drop me a email or WhatsApp, and I'll get you connected. Okay. Well, in that case, I really appreciate your time, Remi. For me, it was very enlightening, and I hope that the audience got something out of it too. I'm sure they did. And I hope to meet you face to face sometime in reality in the near future.
Thank you very much, Rory. Thanks for everybody to listening, and open to any suggestion or any contact. Thanks a lot.
Super. Thanks. Ciao.
Thank you. Bye.